I'm going to let you in on a little secret. Getting rich fast with trading does not exist. If it does, it's certainly not sustainable. I'm not here to show you some garbage trading video that's going to teach you to magically make $10,000 in profits in the next 5 minutes and tell you to buy my trading course. I'm going to show you all the different ways that I've been trading in the past 5 years or so, with a lot of ups and a lot of downs, a lot of failures, a lot of money made, and a lot of money lost. And I've gotten to the point where I can now live sustainably and live independently through trading, through over a $1 million portfolio, where I can now make consistent payouts every single month. I want you to understand that none of these methods are easy, and none of them are going to produce quick results. It might take you several years before you start producing your first $1,000 with trading. If you continue to watch this video after knowing that, I respect you. It's a long grind, a lot of hustle, consistent work every single day, but once you get there, damn, does it feel good to be making full-time income online as a trader from anywhere in the world? Let's go back all the way to the early times when I first started trying to make money online when I was living with my parents. It all started when I was 13 years old. I created my own Facebook Marketplace page and my own Gumtree page, which are local classified ads and marketplaces in my local area, where I would go and sell secondhand products, mostly electronics, cell phones, laptops, PC monitors, PC parts. I would buy them off of Facebook Marketplace for a cheap price and resell them on Gumtree at a 30 to 40% markup. I will never forget this. Back in 2012, when I was turning 13 years old, the first product I ever bought was a Samsung S3, back in the day when that was still like the latest phones out there, along with the iPhone 3GS. And I bought it for 800 Rand, which was about $40 back at the time. And about a week later, I sold that same phone for $1,200, which was about $60. And in a period of a week, I made $20, which in my country was about 400, 500 Rand. I said to and believed in myself, if I can do this once, I can do it again and again and every single day and make 500 Rand a day. I was that kid in school trying to sell you stuff. I was a natural entrepreneur from the beginning, and I just tend to have this natural talent for making money. I'm not saying that you need that natural talent, because I chose that route. I instilled that natural talent into me. It was a decision that I made at the time, so therefore it's something you can do as well. The conclusion that I'm getting down to is that when I started trading, I had a very good foundation. I built up multiple businesses, making multiple streams of income, which essentially takes away so much emotional investment into your trades, because I've had endless people message me on Instagram, even come up to me in person. I want to start trading because I've just lost my job. You cannot start trading if you've lost your job, because you're going to have no money and no foundation to trade. You're not going to become a successful trader overnight. And that's what I'm getting down to with my whole story here. And that is why I was never able to give up with trading, is because I had that natural passion and I was smart to set up that foundation. Fast forward a couple of years later, I got into trading through YouTube tutorials. I was that trader searching up every single tutorial, trend lines, indicators, buy and sell algos, EAs, and I did endless research, 3, 4 o'clock in the morning, studying different ways to go and trade. And it was all this information overload. I eventually got to the point where I've watched so many YouTube videos, I don't even know where to start. Fast forward some time after that phase, in and out of trading, blowing accounts, making profits, blowing accounts. There was absolutely no risk management. There was no mathematical approach to my trading. It was just pretty much gambling. And fast forward a few months after that, I came across a mentorship called MMFX, which absolutely changed my entire trading career into a whole different realm, which ultimately changed my whole life. And the reason why I fell in love with MMFX and his mentorship so much is purely because of his mental, his mathematical, and his bulletproof mindset approach to approaching the markets. And that was the point in time where I really started to emotionally mature as a trader. This was about 2 years into my journey. 2-3 years after going through the MMFX mentorship, I still couldn't find profitability. I was in and out of trying to force trades, trying to make a quick profit, and I could feel I was still super emotionally immature. The second video that I came across on YouTube that really cemented me as a profitable trader was the study of backtesting, collecting data, collecting results on trading systems, and letting that data speak for itself and prove if that specific strategy works, rather than going onto YouTube, searching a strategy, automatically thinking that if the strategy is working for them, it must be profitable for me. I've made it. Wow, I'm a profitable trader. It does not work like that. You need to put in hours days, weeks, months, and years of backtesting, collecting data. I'm going to show you in the next 5 minutes the exact tools that I used to find my edge to become a 7-figure trader. Fast forward today through years of backtesting, years of failing accounts, failing prop firm challenges, and eventually getting funded for the first time in 2022. And fast forward all the way today, right now, I now hold a trading portfolio of $1 million where I can consistently make 3 to 10% every single month in that account through all of those years of ups and downs, losses, emotional damage. But that is exactly the mental and physical process that you need to go through to make it in anything. Not just trading, not content creation, whatever you're doing, you need to go through a hardcore beatdown of losses, losing money, emotional damage, failures, because that is all the cemented foundation of your emotional maturity, your ability to make clear decisions, and your ability to succeed at whatever you're doing. With my entire story being said, let's dive into the juicy stuff to where I am today to essentially help you understand what it's like as someone who's been through all of it to today where I'm now that consistently profitable trader where I can advise, teach, and guide you on that same path to becoming your own independent trader. In the past 3 years, my charts have gone from this to this. Completely relying on indicators with no clarity, no understanding of price, no mathematical understanding of risk management, to this where I have a full clear picture of knowing where exactly price needs to go. Every single morning I hop onto the charts with a clear set of rules on how I mark this up and understand price, which is all what I'm going to teach you further in today's video. And on top of that, understanding risk management as a percentage and mathematical game rather than just trying to make a quick $1,000 while forgetting the idea that I'm actually risking over $5,000 on my whole account to make that $1,000. Whereas today I know how to risk $50 to make that same $1,000. I'm going to take you through 1 or 2 examples of how I do full top-down analysis on the markets today, and also 1 or 2 live trades that I've taken on my $2 million evaluation that I'm busy with at the moment to upgrade that portfolio from $1 million in funding to $3 million and to even scale more from there. So coming back all the way to the basics of the foundation and system that I trade is what I like to call 3 structure types. Essentially, the algorithm of price moves in the form of where money lies and where money needs to go, as the markets are controlled by large institutions, banks, any other financial institutions, pumping millions and billions of dollars through the markets on a daily basis. And once you can learn to identify where those institutions are buying and where those institutions are selling, you will know exactly where you need to sell and exactly where you need to buy to make profit. And this is the foundation of identifying that. Price moves in the form of higher highs or lower lows through the idea of strong protected lows and strong protected highs. Most recent, structural strong low that took out the previous weak high. After price takes out a weak high every single time, guaranteed, price will incur some kind of pullback phase. This move happens to incorporate the rebalance of supply and demand in price. After price has pulled back, mitigated orders in this previous structural range, the expectation of order flow is to continue targeting these weak highs. And a repeat of that, new break of structure, new highs targeted. Instead of price respecting these strong lows, we broke structure to the downside. Now all that changes is instead of creating new strong protected lows, we're now creating strong protected highs, putting price in a bearish trend. So the anticipation after this break of structure to the downside will be for price to incur a pullback phase into areas of supply to rebalance demand to eventually continue targeting these weak lows. Same thing again until else changes. And it's the most simplest and basic concept that you need to understand to have that clarity in price. Is price and structure does not look as clean as this. Because what happens is there's multiple time frames and there's multiple times where different institutions are buying and selling. And that's why you'll see on perhaps a lower time frame, there is forms of smaller structure, changes of characters, smaller structural breaks, and continues with this to follow through the overall higher time frame narrative. And even within this lower time frame, there is tiny, smaller structure that occurs. And this is what 99% of traders struggle with, is now when you start to incorporate more timeframes and different timeframes of structural stories, it can get very confusing and you can get to the point where you don't actually know what you're looking for anymore. And that is why in today's video, I'm going to help you out with this, and I'm going to guide you to understanding how you can spot this clearly on your charts with a mechanical set of rules that I want you to practice, that I want you to go to sleep dreaming about it, thinking about it when you wake up, when you're eating your milk and cereal in the mornings. I want you to be grinding this through your head. The first thing that you need to do is to put this into a mechanical rule-based method. We need to identify these three structure types in three mechanical timeframes. So we'll start off with our daily time frame. So now you know exactly where you need to go and start off on the time frame when you hop onto the charts every single morning. And it's so important to have that higher time frame narrative, because the lower time frame is foundationed on the higher time frame. So you need to have that clear understanding of where the higher time frame needs to go, so that when your lower time frame confirms, you can react and you know you're on the right side of price. So our daily time frame, we'll start off with our swing structure, which you'll see on this example that I've drawn over here, is these larger legs forming. Onto the next time frame, our internal structure will be our 4-hour time frame, which is all of this smaller structure that you'll see in the middle of these larger daily legs. Our lowest time frame where we identify our structure is our M15, which is our fractal structural time frame of the daily, which is all of the smaller structure that happens within our 4-hour time frame. So let's come over to the charts and cover a live example. So coming over to XAU, USD, all the way to the daily time frame, you'll identify that price all the way back in February 2023 had a recent break of structure to the upside. We had a previous break to the upside, pullback phase started, mitigation into areas of demand. These are now weak exposed highs, or also what we can call our draw on liquidity. The eventual anticipation of institutions that are in control buying the market is to target these weak highs. So we automatically know, without even looking at the lower time frame, once that lower time frame starts to realign bullish, we know that that is very good probability that we're going to start targeting those weak highs. After the higher time frame break of structure, the pullback phase started. Strong protected lows, weak highs. We know at some point in time that the expectation of price will be to target these weak highs. Pullback phase started. Supply in control, understanding that price is not overall bearish, this is just catering for a pullback phase, mitigation of extreme demand areas in this entire swing range, internal shifts bullish. Now we know this is good confirmation that we're ready to target these weak highs. After that internal shift to the upside, we know that there will be a pullback phase. Pullback phase started, the smaller structural time frame started realigning bullish. So now we know our swing is bullish, our internal is bullish, our fractal is now bullish. Everything is realigned to target these weak highs. You are next to guaranteed to target these weak highs, which is exactly what played out. And within this bullish leg over here, my community and I caught a 120 risk to reward trade on gold. Fast forward today, new break, pullback phase, strong protected lows, internal shifted bullish, internal pullback to continue targeting those weak highs. We've now had our new daily break of structure to the upside. So one of two things are going to happen with price. We'll either continue bullish until price shifts bearish to confirm the start of the internal pullback back into demand, with still the same anticipation that remains to follow through price and target those weak highs. So now we know, coming from the daily time frame, these are weak highs. The anticipation is to target these weak highs. So we can come down to our 4-hour time frame. Most recent 4-hour swing break to the upside, strong protected lows, because after the previous 4-hour break of structure to the upside, pullback phase started, new weak highs, price targeted those weak highs. The lowest point after this pullback that creates the next break of structure becomes your strong protected low. 4-hour break of structure to the upside, strong protected low, lowest point after that pullback. Pullback starts, price respects those strong protected lows to target those weak highs. We've now had the 4-hour swing break of structure to the upside, our internal structure, which is all of the smaller structure that happens within our 4-hour time frame. And don't worry, I'm going to give you a much more in-depth, full course on this at the end of this video, so make sure to keep watching through to receive that. We've now had an internal break to the upside, internal strong protected lows, internal weak highs, which we've just targeted this morning, and we've been in longs with inside of here with my community for the past couple of weeks riding this pro trend bullish run, and we've all hit full TP this morning and secured full profits, which is really fantastic. And again, it comes down to just following your rules of 3 structures types so that you already know that longs on gold is going to be higher probability, but that does not mean shorts are invalid. So after the 4-hour swing break of structure, we know deep down somewhere that the pullback phase is due to start. We identify that pullback phase once an internal strong low is broken to the downside and created a new strong high. Then we know that pullback phase can start, and as we start to approach demand areas in this overall 4-hour swing range at the strong lows, the eventual anticipation will be for the internal to start realigning bullish, which will then be confirmation to target those weak highs again. And over here, we'll get involved in longs again, staying pro trend and staying on the right side of price. Okay. So now that we've covered our daily, our 4-hour time frame, we know on the daily, highs are weak. 4-hour, highs are weak. We're bullish on all higher time frames, coming over to the M15 time frame. Previous M15 swing break to the upside. Pullback started after the internal shifted bearish, knowing that all of this is just an interim pullback phase where eventually the anticipation will be for the internal of the M15 time frame to start aligning bullish to target our weak highs. And you can pretty much see the crystal clear demand chain that has formed in the past couple of days on gold. All of these opportunities for longs here, and here to target these weak highs. I honestly feel sorry for anybody that's been trying to sell gold. It's just, to be blatant with you, you're on the complete wrong side of price. But that is why I've got tutorials like this over here on my MMFunded channel to help you shift your perspective into the right side of price. Okay, so coming all the way back to the entry that we initially took on XAU USD, we know that after this pullback phase, the eventual anticipation will be for price to target these weak highs. And this is essentially my mechanical entry criteria inside of higher time frame M15 supply and demand zones, is that a demand zone needs to have valid liquidity to sweep into that zone with a 3-minute entry confirmation, which I'm going to break down for you just in a bit, to enter price to target our internal weak highs and also our M15 swing weak highs, and also in alignment with our higher time frame daily and 4-hour swing structural story. So coming over to the 3-minute time frame all the way back to this entry confirmation, which was back in towards the middle end of March, 24th of March on Friday. This is exactly what I was looking for. We swept previous day session liquidity into a higher time frame POI, and this is my simple entry confirmation criteria. All I'm looking for on the 3-minute is the most recent in the bearish leg 3-minute fair value gap. I want to see after a liquidity sweep, ideally, if it's a previous day session liquidity, this was the previous day London session lows that we swept into this higher time frame POI. We're looking for 3-minute bearish fair value gap, shift bullish with a candle body closure. We don't wait for pullback. We enter immediately on that candle closure. Stop below the low, targeting your relative structural weak highs. And that's a more outlined, simple, and this is a more fairly rough version and a rough breakdown of how I trade, is that I use all the time frames, complement them together in a mechanical rule-based structural story to remain on the right side of price. I then trade SND zones with my mechanical entry criteria, but because of my structural story, I know that if supply or demand is in control, I can promise you over here, within these supply zones, with these breaks of structures to the downside, holding these liquidity, the sweeps into these supply zones, tons of traders, millions of dollars, got trapped out trying to short price on supply without understanding that truly demand is in control. And that is why 90% of you guys that try to trade supply and demand, thinking it's the holy grail system of how price moves, won't actually be profitable because it's not enough. Supply and demand prints everywhere in the market. You need to pair this up with your mechanical structural story. And this is the system that I trade today to manage over $1 million in capital. Nothing is different. Nothing is outstanding compared to the average trader. All that's different is what's in here, my mind. I know that I've researched the system over 10 years worth of data. The data proves itself and speaks for itself. I've applied myself over the years to know that this works. So if you guys want to get full mentorship access with me, I'm going to give you a 50% coupon as I live stream with you every single day. And this mentorship I should be charging thousands of dollars for, but I only charge $29. And the reason I do this is because I do believe that as valuable as this information is, I want as many people to get access to this. Also, you may also ask, but if many people have access to this strategy, it's not going to work anymore. It's absolute bullshit. Our little $100,000 or $200,000 accounts, never mind your small $50, $100 accounts, doesn't flinch the market at all compared to the billions of dollars of orders that runs through price every single day. If a billion people in this world traded the strategy and was profitable, it wouldn't affect price. And you just need to understand how much money actually goes through price. I'm going to give you access to my live streams and a full 100-hour course on this that will take you from zero to a $500,000 trader in the next 12 months. I will leave a link down below to that link. And also, if you guys want a full 40-minute free course here on YouTube that will teach you how to understand and spot this order flow and the algorithm and the numbers behind what moves each and every candle, I've created a very in-depth 38-minute video here on YouTube for you guys. And this video I actually got from a 1,200 pound course that I've posted on YouTube for free. So I shouldn't even be giving this to you, but I'm going to give you access anyway because I want you to open your eyes to the market and not your ass. So click on this video over here and I'll see you on the inside.